Hi, this is the first part in the series of videos for example sums on the topic of issue of debentures for consideration other than cash. So let's go to the example sums. Example sum 1. XYZ Limited purchased assets of rupees 9,90,000 from ABC Limited. Payment was made by the issue of 11% debentures of rupees 100 each. We asked to pass the necessary journal entries when debentures have been issued. The case 1 is at par. The case 2 is at a premium of 10% and the case 3 is at a discount of 10%. Let's begin with the solution. In the books of XYZ Limited, journal, we have the date/serial number, particulars, LF, debit rupees and credit rupees. Now in all the three cases, the common journal entry is for the purchase of the asset. So we will write that entry first. Common journal entry. Sundry assets, account debit, amount of sundry assets purchased is 9,90,000 rupees. 2. The name of the vendors ABC Limited, account, and the amount payable to ABC Limited is also 9,90,000 rupees for purchase of assets from ABC Limited. Now we will go to each case separately. Case 1, it is at par. The journal entry is the name of the vendor ABC Limited, account debit, the amount payable to ABC Limited is 9,90,000 rupees. 2. 11% debentures, account. We need to calculate the number of debentures. We will do it as part of working note. Number of debentures issued is equal to amount payable to vendor by issuing debentures divided by the issue price per debenture. The amount payable to the vendor by issuing debentures is 9,90,000 rupees divided by rupees 100 is the issue price per debenture when the debenture has been issued at par. So we have 9,900 debentures. So let's insert it in our journal entry. Against 11% debentures account, we need to write the 9,900 debentures multiplied by the face value of the debenture, which is rupees 100, comes up to 9,90,000 rupees. Narration: 9,900, 11% debentures issued at par, face value rupees 100 for consideration other than cash. The case 1 is over. Let's move on to the case 2. At a premium of 10%. The journal entry in this case: ABC Limited account debit. The amount payable to ABC being 9,90,000 rupees to 11% debentures account, and we need to credit securities premium reserve account. Let's ascertain the number of debentures to be issued. Number of debentures is equal to the amount which is payable to the vendor by issue of debentures, 9,90,000 rupees, divided by the issue price of the debenture. The debenture has been issued at a premium of 10% on the face value of rupees 100. Therefore, the issue price is 110 rupees. So we have 9,000 debentures as the number of debentures issued. Let's fill up the entry. Against 11% debentures account, we need to write the 9,000 debentures multiplied by rupees 100, which is the face value, comes up to 9 lakh rupees. And against security premium reserve account, we need to write 9,000 debentures multiplied by the premium per debenture, which is rupees 10, comes up to 90,000 rupees. Narration: 9,000, 11% debentures of rupees 100 each, issued at a premium of rupees 10 for consideration other than cash. So this is the answer, second journal entry for the case 2. Let's move on to case 3. Case 3 at a discount of 10%. So the journal entry is ABC Limited account debit. The amount payable to ABC Limited, 9,90,000 rupees. We need to debit discount on issue of debentures account, discount on issue of debentures account debit to 11% debentures account. Let's get the number of debentures issued. Number of debentures issued is equal to the amount payable to the vendor through issue of debentures, 9,90,000 rupees, divided by the issue price of the debenture. The debenture in the third case has been issued at a discount of 10% on the first face value. So the discount amount per debenture is 10 rupees and the issue price is 100 rupees minus 10 rupees comes up to 90 rupees. So the number of debentures is 11,000 debentures issued. Let's fill up the journal entry. Against discount on issue of debentures, we need to write 11,000 debentures multiplied by rupee 10 per debenture. Discount comes up to 1,10,000 rupees. And against 11% debentures, we need to write 11,000 debentures multiplied by the face value of rupees 100 per debenture comes up to 11 lakh rupees. 11,000, 11% debentures of rupees 100 each issued at 10% discount for consideration other than cash. Please remember to write off the discount on issue of debentures account. In the third case, since we are issuing it at discount, there is no balance in securities premium reserve. Nothing is given in the question. So we will write it off from statement of profit and loss. Statement of profit and loss, finance cost, to discount on issue of debentures account. The amount of the discount is 1,10,000 rupees. Narration for discount on issue of debentures written off. The entries are done. I will remove the split. We will use the answer. That's the sum on the top. This is the common journal entry for all the three cases. This is the answer for case 1 for issue at par, followed by the working notes. This is case 2, when debentures are issued at a premium of 10%, followed by the working notes. This is the third case, debentures being issued at a discount of 10%, followed by the working notes. Example sum 2. RK Limited took over the assets of rupees 7 lakh and liabilities of rupees 60,000 of VK Limited for the purchase consideration of rupees 6,60,000. RK Limited paid the purchase consideration by issuing 9% debentures of rupees 100 each at 10% premium. We are asked to pass the necessary journal entries in the books of RK Limited. Solution. In the books of RK Limited, date/serial number, particulars, LF, debit rupees and credit rupees. We'll prepare a few working notes at the top. Now, as per the problem, the purchase consideration is equal to rupees 6,60,000. As far as the net assets taken over is concerned, it's the amount of the sundry assets, which is rupees 7 lakh, minus the sundry liabilities taken over, rupees 60,000, which comes to rupees 6,40,000. Since the purchase consideration of 6,60,000 is greater than the net assets taken over, rupees 6,40,000, the difference is to be debited to goodwill account. And the difference is rupees 6,60,000 minus 6,40,000, which is equal to rupees 20,000. So let's pass the first journal entry. Sundry assets account debit. The sundry assets taken over is rupees 7 lakh. We need to debit the goodwill account. Goodwill account debit 20,000 rupees to sundry liabilities account. $60,000 worth sundry liabilities taken over, and to the name of the vendor, VK Limited account, for the amount of the purchase consideration, which is 6,60,000. Narration: assets and liabilities of VK Limited taken over. Let's move on to the second entry. It says 9% debentures of rupees 100 each are issued at 10% premium. You will debit the vendor account with the amount of the purchase consideration, the amount which is payable, 6,60,000 rupees, to 9% debentures account and to securities premium reserve account. Let's do the calculation for the number of debentures issued. Working note: to calculate the number of debentures issued is equal to the amount payable to vendor divided by the issue price of the debenture. This is equal to 6,60,000 rupees divided by the face value is 100 and it's issued at 10% premium. Therefore, the issue price is 110 rupees and comes to 6,000 debentures. Let's continue with the entry. Against 9% debentures, we will write 6,000 debentures multiplied by the face value of rupees 100, 6 lakh rupees. And against securities premium reserve, 6,000 debentures multiplied by premium per debenture, which is rupees 10, comes up to 60,000 rupees. Narration: 6,000, 9% debentures of rupees 100 each issued at rupees 10 premium for consideration other than cash. The entries are done. I will remove the split. We can view the answer. So that's the sum on the top, followed by the notes for the calculation of the amount of goodwill. And these are the journal entries, followed by the working notes for calculation of number of debentures issued. Example sum 3. Rocky Limited purchased building for rupees 22 lakh. Half the payment was made by cheque and the balance half by issue of 9% debentures of rupees 100 each at a premium of 10%. We are asked to pass the necessary journal entries. Let's go ahead with the solution. In the books of Rocky Limited journal, we have the date / serial number, particulars, LF, debit rupees and credit rupees. We'll write the first journal entry for purchase of the building from the vendor. Building account debit. The value of the building is 22 lakhs to vendor account. The amount payable to the vendor is also 22 lakh. For building purchased from vendor. Next entry is for payment of purchase consideration. Vendor account debit. The amount payable to the vendor is rupees 22 lakh. It says half the payment was made by cheque. So half of the payment is through cheque. So it's to bank account, 50% of 22 lakh, which is 11 lakh. And the balance by issue of 9% debentures of 100 each at a premium of 10%. So it's 2 9% debentures account and 2 securities premium reserve account. Let's do the calculation for the number of debentures to be issued. Working note: number of debentures issued is equal to the amount payable to the vendor through issue of debentures. Divided by the issue price per debenture. Now, out of the purchase consideration of 22 lakh, 50% is payable through issue of debentures. So, that's 11 lakh rupees divided by the face value of debenture rupees 100 issued at a premium of rupees 10 comes up to 110 rupees. Number of debentures to be issued is 10,000 debentures. We'll insert this amount in the journal entry. Against 9% debentures account, 10,000 debentures multiplied by rupees 100 face value comes up to 10 lakh rupees. And against security premium reserve, 10,000 debentures multiplied by rupees 10 premium per debenture comes up to 1 lakh rupees. Purchase consideration settled by check for 50% and balance by issuing 10,000 debentures of rupees 100 at a premium of rupees 10. The entries are done. I will remove the split. We can view the answer. That's a sum on top. And this is the journal, the two entries. Followed by the calculation for finding out the number of debentures to be issued. Example sum 4. EXE Limited purchased assets of rupees 8,40,000 and took over liabilities of rupees 80,000 of Hay Limited at a value of rupees 7,20,000. EXE Limited issued 10% debentures of rupees 100 each at 10% discount in full settlement of the price. The company decided to write off discount on issue of debentures from securities premium reserve of rupees 1 lakh. We are asked to pass the journal entries in the books of EXE Limited. So, we'll begin by preparing a few notes. The purchase consideration as per the question, it is rupees 7,20,000. The net assets taken over is equal to the sundry assets taken over, which is rupees 8,40,000 minus the sundry liabilities taken over, which is rupees 80,000. This amounts to rupees 7,60,000. The purchase consideration is less than the net assets taken over. So, we need to credit capital reserve account with the difference, which is 7,60,000 rupees minus 7,20,000 rupees, or in other words, rupees 40,000. Let's go ahead and prepare the journal entries in the books of EXE Limited. journal. We have date / serial number, particulars, LF, debit rupees, and credit rupees. The first entry is for the assets and liabilities taken over. Sundry assets account debit. The assets taken over is 8,40,000 rupees. 2. Sundry liabilities. Account. The liabilities taken over is 80,000 rupees. 2. Hay Limited account. The purchase consideration 7,20,000 rupees. And 2. Capital reserve account. ₹40,000. Narration. Assets and liabilities of Hay Limited taken over. We'll move on to the second entry is for settlement of purchase consideration. Hay Limited account debit. The purchase consideration amount payable 7,20,000 rupees. This is settled by issue of debentures at discount. So we need to debit discount on issue of debentures account. To 10% debentures account. Let's do the calculation for the number of debentures to be issued. Number of debentures issued is the amount of the purchase consideration to be settled by issue of debentures 7,20,000 rupees divided by the issue price per debenture, face value 100 rupees at rupees 10 discount, so it's rupees 90, comes up to 8,000 debentures. We'll insert it in the entry. Against discount on issue of debentures, it's 8,000 debentures multiplied by rupee 10 discount per debenture, 80,000 rupees. And against 10% debentures, it's 8,000 debentures multiplied by the face value per debenture, rupees 100, comes up to 8 lakh rupees. Narration. 8,000, 10% debentures of rupees 100 each issued at a discount of rupee 10. And the final entry, we need to write off the discount on issue of debentures. The question says there's a securities premium reserve of rupees 1 lakh. The amount of discount to be written off is only 80,000. So we can use the securities premium reserve to the extent of 80,000 to write off the discount. Securities premium reserve account debit. We need to write off 80,000 discount on issue of debentures. 2. Discount on issue of debentures account 80,000 rupees for discount on issue of debentures written off. The entries are done. I will remove the split. We can view the answer. The sum is on top, followed by the calculation of capital reserve. These are the 3 journal entries. Followed by the note to calculate the number of debentures to be issued.